Let me now welcome on board and let's take stock of Canara Bank's earnings. We've got SK Majumdar, the ED, joining in on the show right now. Mr. Majumdar, great to have you on ET now. Your NIMs have declined by about 5 basis points on a sequential basis, despite positive outlook in the last quarter commentary. While other banks have posted moderate margin gains. What are the reasons, according to you, for this decline?
Our advanced portfolio, around 49% is RLLR linked, that is repo linked. And in those advances, the transmission of rate cut happens immediately, whereas my deposit rates takes about 6 months to 1 year to get reset. So it is this temporary transition which has led to this rate margin cut. But on a positive side, our SB individual, which is the sticky CASA, has on a quarter-on-quarter basis has improved by 9,000 crore and year-on-year basis by 29,000 crore. So this will insulate this to a large extent, and so is our growth in RAM portfolio. We are growing in RAM where the yield is high. It is at more than 8.5. So this is how we are expected to insulate, but this is a temporary mismatch of rate cut which has resulted in this margin dip.
And will this pressure persist on the margin? If there is another rate cut, when can we expect a turnaround with regard to margins? What's the guidance for Q4? Give us that. Give us a sense of that.
We have said because we expect a rate cut. So if there is a rate cut, another rate cut during this current quarter, the margins are expected to be under some pressure. But if it doesn't happen, we are expected to maintain this NIM to almost this level. Our guidance, as we have given, it is between 2.45 to 2.5. We expect means marginal 1 or 2 basis point it may dip in this in case there is a further rate cut.
Okay, and treasury income, it's increased significantly this quarter. You've seen a good bump up. Can you provide an outlook range with regard to where this goes going forward, and whether this kind of a number is sustainable? What's played out basically? Give us a sense of that.
No, the treasury, whatever gains we are seeing under profit on sale of investment, that contains 2,000 crore of our divestment in Canara HSBC and Canara Rebecco. This is completely one-time income, which will not be there in the coming quarters. And but we expect that the treasury, that the liquidity will improve in the system, whereby that government is proposing, RBI is proposing OMOs to go forward, and that will improve the overall treasury performance during this quarter vis-a-vis last quarter.
Right. And your provisions, they've increased 10% on a sequential basis, but NPAs have improved significantly. Does this improvement in NPAs allow for lower provisioning going forward?
As you know, we are moving the provision coverage ratio. Our bank is a one which is constantly improving the provision coverage ratio. It is not due to higher NPA, but we have proactively or aggressively made some provisions just to improve the provision coverage ratio in line with my peers. And that is the main reason. We made some provision in stressed assets, that we have 2-3 accounts which are appearing in SMA, 3 accounts. So where we have proactively made provisions for future. Otherwise, from the NPA point of view, we need not do, but we are coming to an end almost to this higher provision cycle also. So this, to answer your question, it should improve going forward. We should be making lesser provisions going forward.
Right. And what about recoveries from a written-off account? That's increased significantly. How much amount has gone to interest income, and will the recoveries then continue in the upcoming quarters?
Yes, recoveries in the medium term, we expect this TWO recovery to continue in on similar lines. And the interest part in that is around 370 crores. And around, we expect that also this interest part also to continue at around 400 crores, which has been the trend between 350 and 400 crores in the last couple of quarters, that also to continue.
Okay. CASA growth was around 9% odd. It's moderated versus earlier. How are you planning, strategizing to improve CASA? Maybe that kind of aids your margins, maybe?
No, that is a very important component of what, as you rightly said, of NIM. But although you look, the CASA might have moderated a bit, but if you see my saving deposit individual, that is the most sticky CASA. That is growing at a very fast pace in this challenging time of CASA also. That is growing at 10.52% year on year, and on quarter also 3.04. The dip has been in savings bank, institutional, and in current, but year on year also current deposits have grown 14.92%. The focus is now on both of those components, and we expect that to perform better in the coming quarters.
And guidance for credit and deposit growth for FY26, would you largely maintain that? Would you be more positive with regard to your guidance?
We should be maintaining the growth that we have shown so far. That is, we should be on the same line as the December numbers. Almost on similar growth we expect going forward in the last quarter.
Right, Mr. Majumdar. Great to have you today on ET Now. Thank you so much for your time.